What's up, guys? Carlton Flowers here, your crypto pro.
Yay!
And I wanted to show a little demonstration to answer a common question that I get from people who are new into investing. And by the way, this is not financial advice. This is for educational and entertainment purposes only. The question is, when do you buy? So I want to show an example of an actual cryptocurrency project that I'm interested in and how I will decide when to buy and hold this project. So let's jump into the details of this. But first, we'll get rid of my handsome face. And here we are on a 4-hour chart of a project called CARR. Now let's just jump over here very quickly and let me pull up the project on CoinGecko, which is the site that I use to research these projects and look at the token metrics. This is Carnomaly. And as we see here, the Carnomaly project only has 530 million tokens, but we don't know the circulating supply. That's usually something I don't like when you don't know what's in circulation. But with a total supply of only 530 million, it's pretty safe to say that this is not a scam project or something that will end up having a new amount of tokens from the total supply dumped into the circulating supply just to pay for the project development team to keep the thing going. Now, if this said, say, 100 billion, and then this was a question mark, that's sketchy. Or if it's 100 billion total supply and there's only 5 billion in circulating supply, that means they can move any amount of 100 billion into the circulating, which dilutes the value of the price, each token for each individual token. So that is Carnomaly. We check out the website by clicking the link, and then you can look and see what the project is all about. And I really like this project. I used to be big time into NASCAR, and it's just a cool project. Bottom line is, it's legit. This is not a scam project. Here we are on the chart, on the 4-hour chart. In fact, let's just jump to the 1 day where we can see it even better, and then we'll just stretch it out. This is what it looks like on the 1 day. And as you can see, it really started out high, and then it dropped way down. So way up here at the top, it was at a peak of 26 cents, and then it falls. This is why I never buy into a project when they first come out of the box. You're almost guaranteed that you're going to see this action here where they take the dive down. And then there's another massive pump followed by another big dump with this big fat red candle here. So you want to wait until the project has died down into a period or a phase of what I call the dog days. So let's just make a box here. This would be the dog days right there. And what I mean by that, why I call this the dog days, is because this is where the price line of the project is laying down low like a dog. And everybody has forgotten about it. Now, a lot of times the volume will be very low. As we see from this period here, it is very low, but then the volume starts to pump up a little bit here, which gives us an indication that it could be close to taking another rally and making a strong uptrend or an upward trading channel from the point of when it exits the dog days. So I would expect that you will have some type of action at some point where there's going to be a trading channel that looks like this, where your price is going to be bouncing up and down kind of like this within the boundaries of this upward trading channel. That's when it is in action. That's what I call being in action. It's in play, where it's actively being traded and the demand is high enough that it causes an increase in value of the price. Now, let's zoom in and go to the 4-hour. Turn drawing mode off, and here we are on the 4-hour. So let's kind of scrunch this in a little bit, blow this up a little bit. I'm going to show you where people make mistakes. So people make mistakes when they think that a project is about to run and they buy prematurely and before the project has had a chance to die down and to lay down low into the dog days. Ask me how I know about this mistake. is because I have made it several times myself. Mistakes are made after the first dive and when you go into the first artificial upward trending trading channel. This is where people buy at point number 1, and then they're devastated because the price goes back down. Once it hits the dog days, you have this bump that is right here, and a lot of people will buy in right there. That is also a mistake because it's not settled completely down yet. Now, when we scroll back in and let's look at it overall, here we are, and notice that it is bouncing around this red line. That red line is what you call the point of control. Let's put that up there, point of control. And that just means it's the average most popular price that the big buyers are purchasing this token. So that means institutional investors, whales, or even the retail investors. The most popular price that they're purchasing was around 1.85 cents. So this is the point of control. It's like the balance point, and we jump up and down along that balance point. This is an important thing. I want to buy when we're below that, either at or below the point of control. We're getting very close right now to that point of control where it's going to be time for me to buy. But we need to zoom in a little bit more so I can see what's happening. The next thing that lets me know of when it is time to buy is where we are on the stochastic cycle. All this is an oscillator that bounces up and down right here. And then it will coincide with high points in price and low points in price. I always look to see what the price is that is returned on the stochastic peaks versus the stochastic valleys. Let's look at some of the peaks. Here's a peak here. There is the price. On the next peak, we had a higher high. On the next peak, we had a higher high. The next peak was weak, and we had a lower high. And then this one, another lower high. This one is in between. This one went a little bit higher, but we never did get into the overbought zone above the 80 line. We never got into this region on this peak. And then, as we can see, we're just settling down. So here we are right now, and the next strong peaks, this one didn't return much on price. This one had a big pump. This one had an even better pump to a higher high, but we're not ready yet. However, we are at a stochastic low point where right here, I'm going to wait for this to cross over and then see if we can kind of get below this point of control into an area about maybe down here where I might start to buy. And I do what is called the DCA game. And DCA stands for dollar cost average. That means I'm going to make several purchases of small amounts where, let's say my first buy is within this box, I might buy here. And then if price continues to go down, I'll just keep making purchases until we hit a low point. And then after the price turns around and starts to move up like this, hey, I'm looking good. And then when we go above this point of control, I should be done buying. We will see what the next stochastic peak returns after this current dip. So once we see the fast line, which is blue, overtake the slow line, which is the red, once we come up like this and hit that next peak, I want to see what the price is going to be. If we return a price that is higher than the previous, if we can come up to here, then that's going to be a higher high, and it might say it's uptrend time. But if it's down here in this box, we're not in an uptrend yet, and I would expect for even lower prices to come. Now, let's clear this out and look at the one-day stochastic. So let's pull the one-day chart. Here it is. And this gives us another picture. And the 4-hour has 6 cycles within the one day. I use this for information. Notice that on these peaks, which are going down, here is a stochastic peak that returned this price. Here is the one that returned this price. And then the next one, which was lower here, did give us the highest high. But now we definitely have a lower high right here. We also notice that we are about to cross over right there. If this crosses over and then we cycle down again, we're going to get a lower high or a lower low. We could come down into this zone right here where we're well below the point of control price. I would like to be done making my purchases down here and then ride it all the way up from that point. This also has to coincide with what is going on overall in the market. And I am thinking that the bottom of this is going to be somewhere between 42,000 Bitcoin and 37,000 Bitcoin. And once Bitcoin blows up, we're going to see this happen right here. We're going to head up. So that is the 1-day chart. So that lets me know that even though, let's jump back to the 4-hour, even though we're at a bottom and about to move up, which could bring us up a little bit, we have 5 more cycles to go within the 1-day cycle. So we might bump up for a little bit and then start to go down. And each time that we complete a 4-hour cycle, that is what's happening within the 1-day chart. So we might have a 4-hour cycle here, another one here, 3, 4, 5, 6, something like that. You get the picture. So in 24 hours, 6 times 4 is 24. We're going to watch the 4-hour chart cycle up and down within this. So it would look like this. The 4-hour might be like, let's see, it goes up here, then down. Then we have a up, a peak, and down. We have an up, a peak, and down. And this is why I like to coordinate the stochastic of the 4-hour with the stochastic of the 1-day. The best place to buy is when the stochastic is bottomed on both the 4-hour and the 1-day chart. So just because we're bottom on the 4-hour, that doesn't mean we're bottom on the 1-day. This would be the best place to buy if everything was perfect and equal. Now, this does not mean that the 1-day stochastic is going to go all the way down to the bottom. The 1-day stochastic could come down and then flip here and come back up or do something like this. We don't know. But all we can say is that we wait and watch and try to catch it when both stochastic cycles are at a bottom point. Now, let's look at the MACD and see if we see anything here. It is a lagging indicator. And the MACD is telling us that for a long time here, we came out of this bottom and we're moving up. And so once we get to the bottom of this cycle here, if we come down one more time and go up, that might coincide with the point where the MACD crosses over the 0 line of this histogram here on the bottom chart. So let's just put an X there. And what I mean by that is the histogram bars are in the green right now, but they're going down. They could go into the red. And once they come out of that and they cross this 0 line and start to move up and print more green bars, that might be time to buy. Now, let's just make some little lines here. So we could go below this and it would start to print little red bars underneath here, kind of like this, and then they get smaller. Then you turn around and you flip and you start to print green bars on the histogram, something like this. This is a sloppy drawing, but you get the picture. So I use this MACD to know what the overall direction is, and we have a divergence here. In other words, upstairs the price is going down and settling like this overall. And then downstairs, the MACD oscillators overall are moving up. So that says that we could be close to a point because of this divergence. When we come to a head, the price could come out and go blast off. Oops, I want a arrow. There we go. Blast off like that. Now, you get the point. Let's scrunch this back down, looking at this overall. And let's just review. We never, ever, ever buy a project straight out of the box when this pump is happening. We never buy the first pump after the first dump. Do not buy into a run. It's the easiest way to get yourself wrecked and to part ways with your money and have to wait weeks, months, or years to get to a break-even point. We wait until the project has entered into the dog days, when it is laying low like a dog on the ground, on the porch, and he's just kind of howling and whining. He's too tired to get up. But once he wakes up and exits the dog days and we get a breakout, we should already be done buying. So we buy during the dog days right here when nobody else is buying. We don't wait for all of the Johnny-come-latelys to FOMO in once this breaks out and we start to rocket and do this uptrend into an upward trading channel. Remember, we have a channel that will be formed when we start to break out, when it is in play, where it will bounce between two parallel lines and start to oscillate, bounce around, and go upwards in price. So that, my friends, is how you buy, so you can maximize your pump potential. If you have any questions, post it below. I hope you learned something. And good luck in your trading. Take it easy, take it slow. We'll see you on the next one. Dadgum. We'll see you on the next one. Yeah.